That's that's a question on a lot of people's minds because as the market has recovered from its March 23rd low, people are asking themselves, should I just hop off the train here because I didn't enjoy the ride that I just experienced and I don't want it to happen again, and I want to make sure that I'm protecting myself during this time. I would say the first point is to look at your risk level that you have with your investments and also your risk tolerance. Now, what we find is that most people take excessive risk in their investing because maybe they're impatient, maybe they want to see more gains. And in 2019, we had a very strong year in the financial markets, and it's tempting to add more risk because you want to see things increase. The unfortunate thing is when we experience declines, that risk will be amplified on the downside. But it's really important to be able to navigate volatility. And in general, we would not recommend departing from stocks, but it may make sense to adjust your risk level depending on where you're at. If you have been quite aggressive, it might make sense to become a little bit more conservative. And if you think of simply a scale of 1 to 10, 10 being the most aggressive investments, maybe you're 100% in stocks. If you're at a 10, it may make sense to come down the scale a little bit. But in general, we find that the biggest gains in the market happen after some of the steepest declines, and you want to be really in the game to benefit from that. Warren Buffett said, be greedy when others are fearful and fearful when others are greedy. And that can be good advice to apply, especially during challenging times like we have.